And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. It's time for today's market forecast for Wednesday, November the 16th. My name is John Hoagland. Thanks for trusting me with your time. As always, context, risk management, and patience are first and foremost in our minds in our trading. Hopefully, if you are in the markets already, you've got things going your way. We've got a busy day today. Just to go over a couple of things that we're doing today at 11 o'clock Central, I'm joining Deanna Angelo from Market Stalkers for a brief chat. She calls it Drinks with Deanna, and or Drinks with Traders. And we won't be drinking anything, maybe just some coffee, but just talking about our experiences in trading. And then at 12:30 today, the group coaching session, a very special group coaching session with Jared Tendler. He's going to be here to answer your questions. I've been reading up on his book, The Mental Game of Trading. I haven't quite got it finished yet. I was hoping to get it done by today, but I will get it finished, and it is quite a good book. I'm looking forward to talking to Jared today. That's, again, a group coaching at 12:30, and then we've got Make Hogue Money at 2 o'clock, and then the recap at 3:15. Retail sales came out this morning at 7:30 this morning, along with import and export prices, and apparently retail sales are remaining relatively strong in this current economic environment. A little bit of a shock, I think. Core month over month, they were looking for 0.4%, came out 1.3%. And retail sales month over month, they were looking for 1%, came out 1.3%. Year over year, they raised the past number a little bit, but it did come out a little bit, I think, lower than that. I can take a quick look here. I can't read my own handwriting. But retail sales year over year, they raised the last release up a little bit, and then it came out 8.37, which was a little bit lower than where they raised the previous number too. So read those numbers as you will. Import-export prices both came out a little bit lower at 8:15 Central today. We're waiting for industrial production at 8:50. Fed member Williams is speaking. Got to make sure and keep your ears out for that. 9 o'clock business inventories and housing market index. A couple of less impactful numbers there. And then, of course, for all you crude traders, the 9:30 EIA petroleum status report. A little bit of a shocker from the API. We'll talk about that just in a couple of minutes. But overall, U.S. stocks just kind of were mixed overnight in patient expectation of the retail sales. We've got all of them, well, they're kind of mixed now. The E-mini S&Ps is pretty much flat. NASDAQ down slightly, Dow up a little bit. Really just kind of keeping things close to the bone here this morning. As far as earnings are concerned, Lowe's came out this morning beating on both earnings per share and revenues. Target came out mixed, and they also came out with a statement that caused their shares to drop pretty drastically after they forecasted weak holiday sales on predictions that surging inflation and dramatic changes in consumer spending may cause the fourth quarter here to be a little bit unhappy or a little bit light is what I'm reading into that. Crude prices have been waffling as the EIA expects a 440,000 barrel drop in inventories after the API shocks with a 5.8 million barrel draw in crude inventory. So the market really waiting for that information, really kind of range bound inside yesterday's range. Again, waiting for that information. So the VIX, I just looked at it. It's down a little bit, 24.45. The dollar index continues to kind of move lower, down a little bit here at 106.2 last I checked, and the yield on the 10-year creeping to the upside, 3.78%. Nothing drastic in any of those numbers as far as volatility is concerned. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the market forecast, market recap, and everything we do here at Top Step. We're hoping that you'll subscribe to our YouTube channel so you get notifications for when we do go live. Very exciting day today. I'm really I'm excited about the folks that I get to talk to. I get to talk to all of you. I get to talk to Deanna. I get to talk to Jared. Actually, you guys get to talk to Jared. He's going to be answering your questions. I know that the email went out. You've had the opportunity to email in questions. You're going to take some questions on the fly. Should be a very interesting and informative hour. Again, with Jared Tendler. Again, looking forward very much to that. So, and again, we got Make Hogue Money at 2 o'clock today, the evening session of Make Hogue Money. We had a couple of trades yesterday. I ended up evening out the day yesterday for us. We'll see what we can do this afternoon on Make Hogue Money. I hope you enjoy it. If you do have feedback or suggestions on anything we do or I do here on Top Step, and let us know. You can always, if you love what you see, tell all your friends. If something is missing, something you don't like, something we can add, tell me, jhoagland@topstep.com. Now, I missed group coaching on Monday. I do have emailed in questions that I am holding for next Monday. So you feel like you didn't get your question answered. We had a power outage here at the house. Wasn't able to present on Monday for group coaching. So the questions I do have, again, we will address this coming Monday at group coaching. All right. So what are we doing with these markets? What kind of context are we looking at? What are we prepping for here? Always be thinking about whether your market is doing a good job and going its direction that it's trying to go, if it's even going in a direction, and think about how good of a job it's doing in getting there, and to use that to figure out those kind of nuances. We're using the daily, the 30-minute, the profile, some open interest information, sometimes even delta information, and we're going to be, I hope, providing more information and more education on all of those tools to help you create a holistic view of the marketplace. And that's really what we're trying to do on here. On the forecast is more of a prep than any forecast. We're not trying to forecast any market. Found that every time I've tried to forecast the market, I'm usually going to be wrong. So I'm just going to be taking the information I have at hand, looking for opportunities where I can limit my risk, and letting the market do its thing. All I expect when I put on a trade is for something to happen. That's a Mark Douglas quote. That's not mine. Don't want to take credit for anything that's not mine. I'm going to take a sip of coffee, have a sip of coffee with me, and we're going to get into the charts here. Got to say good morning to everybody. I forgot about that yesterday. I don't want to do that. Murph is the first one in the room. He wins the prize this morning. Spencer, good morning. Scott saw, and he conquered. Shaw Cunningham, good morning. Hegel Matters, Dimitar, Charles, Bill, Sonny, Naztec, good morning. Good morning, whatever it is, good morning. George Duque, good morning. I got Lacey right next to me in her bed that she's finally using. Caesar, Theodora, it's good to see you. George. Lacey's no longer on the food-ridden couch. She's got her own couch that she finally likes now, which is very nice. Murph, what a fantastic day. Winter's on the way back. I have a day off from work and I can watch Hogue. Does it get any? Oh, well, you're going to see a lot of me today then, Murph. Glad to see that you're here and with us, and it's great to see you again. My brother Rick is here. Don't we all love him? I know I do. Clarence, Danny, David, JM, Marcelo, the Red Spider is here. Spider-Man, good morning. Glitter Sandwich, Alejandro, John, Serenity Trader, DA. Speak for yourself on the drinking. That's up to you. That's up to you. I have done in the past on the trading floor a little drinking and trading. Sarah Hall, good morning, prayers and love to you as well. Caesar, JD Royalty, Rusty Golfer, my spirit animal's here. It's good to see you. JD Royalty, may today bring wisdom, patience in the markets. Yes, patience, so important, right? Jason Lewis, the Rooster, Anissa, Joe, good morning, Joe. Rob T, Vince, good morning. Kyle, Naztec, do I join the session with Jared if I didn't receive an email? It's gonna be in the same spot you are right now. It's gonna be done on our YouTube channel. So just go to the YouTube channel. You'll see that there will be a prep The session is waiting and you'll be able to join right in. I think that's the way it's going to go. Okay. It's just right on our YouTube channel. So right where you are right now is where you're going to be able to see that session. Fred Decker, thank you. I'm thinking that we're going to have another good, fun session today. Hopefully you're going to be able to join, and maybe you've got your microphone situations figured out so you can join me and we can discuss these trades and we can have a good time. Orion, good afternoon, good morning, I mean. Dr. VJ, Kyle, love a pullback after the PPI rally, a couple of days of distribution. All right, Jules, Stephen C., Mike M., Ron Murdo, you stay classy. There you go. Chart language. The charts are proving that what's happened in the 8:30 push also happened at the 9:30 push. We'll have to see. We'll take a look at that in the charts. James Harris, good morning. The human-sized dog bed. No, I did not see that. Jordan, good morning. Mike, oil did nice yesterday. Good. Controlling anxieties. Very good, Captain. Do you know Trades by Matt on YouTube? I don't know Matt in person. I know he's very popular. Yeah, there's a lot of global events out there, that is for sure. And please remember to keep praying. Keep praying for peace in the world and in yourself. NASDAQ and e-money. Yeah, I know of Trades by Matt. I don't know him personally. And again, I know he's very popular. All right, so let's jump into the charts. Take a look at these markets. Here's the daily in the E-mini S&Ps. Okay, yesterday, this is crude oil. I am sorry, hang on. Let's go to the daily in the S&Ps. So yeah, we've really kind of run into some difficulty with our continuation to the upside, haven't we? Yesterday we had value structure remain higher, even though we had a kind of an outside day in extended trading hours and regular trading hours to a degree. Volume and open interest have been waffling for the last 2 or 3 days. Whenever we're thinking about the direction of the market, and I would say the medium time frame direction in this market is attempting to continue to move to the upside. But how good of a job is it doing getting there? We added 4,600 in open interest yesterday after losing about 5,200 the day before. So again, open interest beginning to waffle. Volume also, I think, beginning to waffle. We had low volume the day before yesterday, a little higher volume yesterday. But the market is, attempting to continue this move to the upside. But again, it seems to be showing signs of struggling. We did put in an excess high yesterday on the daily chart and on the profiles. We're going to see that shortly. We also kind of fixed a whole bunch of weaknesses in the profiles over the last couple of days yesterday. So we'll take a look at that also. Yesterday was a bit of a news-driven day. We all know that what happened in Poland. We're still waiting to find out what happened, if it was an accident. And we are, of course, praying that these things just cease happening altogether. So let's take a look at the 30-minute chart. Yeah, I'm hearing that there's some saying that the yesterday was a mistake. The missile was somehow caused by Ukraine, and hopefully that's going to calm everything down, although the loss of life is always tragic. So we get the 30-minute. We didn't really have any overnight inventory. We're getting a little bit of response from the retail sales numbers. And what do you think that the traders are thinking? They're thinking, well, if retail sales are remaining strong, that may force the Fed to be a little tougher with interest rates to try and slow things down a little bit. So I think our equities are kind of digesting that information and kind of pushing to the downside. I mean, look at this. We have this big up move. Now we've got 3 days where value is moving higher, but not really aggressively. We've got a ways to go before we reach any weekly kickoff levels to the upside where we can look for continuation. Today we're pretty central, or we were very central inside the range from yesterday. You've got an outside day from the previous day. Right now we've got an inside extended trading hour and regular trading hour range. We did cover a lot of weaknesses in the profiles yesterday. We had 2 week highs up here. Now we finally see that we've got a degree of excess in the regular trading hour session and the extended trading hour session. We also traded down to the week low from the night before last in that push to the downside after the news came out about Poland, and so we just really took care of a whole lot of weaknesses in structure. We've got a lot of space down below. We've got expectation, some pretty good expectation of eventually coming down and rechecking this rather prominent volume point of control. But right now we're kind of in the middle, and I'm going to try and stay patient looking for my opportunities today. Take a look at the TPO chart here. So here we got a week high, we've got a week high, we traded above that. We had a week low yesterday in the overnight session that we did trade down, check, and then reject below. Take a look at the overnight session from last night. Weak and weak. But again, very centrally located inside the range from yesterday. It looks like we're going to be opening relatively close to or checking very early this little anomaly that we left. Got a couple of holes. It's a little bit toothy yesterday. Opening in the middle of this may kind of just turn us into a repair type of situation, even though the double distribution trend day, the single TPOs were taken out later in the early afternoon session yesterday, and we kind of closed this market relatively centrally located, but higher than the previous close. So we don't have any. Here's the excess at the high yesterday. Here's our overnight excess at the high. Here's our excess at the low. And we're right in the middle. Stay patient today. We do have more economic information coming out here at 8:15 industrial production. Lots of possible talking Feds throughout the day. There's going to be opportunity. I'm just going to try and stay patient. If I go looking for trades, I'm going to find one. Probably not going to be the good one. David Freeman is expecting a sell-off today. Mason, NATO announced it was an errant Ukraine. Okay, it's not good, but it's not at least escalating with Russia, right? Here's crude oil. We are in rollover. Today we have December, at least early in the session, maintaining with higher volume. I'm going to stay with the December contract until tomorrow. We will switch to January. Can't believe we're already at January 2023. We're still kind of remaining in balance. We're having a little bit of trouble accepting below weekly kickoff low, which that weekly kickoff low is 85.25. Remember, these are zones. They're not specific or finite levels with which to look for opportunities. Just near those areas are where we may find opportunity to limit risk. Open interest is a little bit blurry, of course, because of the rollover. Overall, we lost 14,000 contracts, but 28,000 of those were in the December contract. So technically, we added 14,000 contracts in the total open interest, all of the contract months. I find that to be somewhat interesting. Some of that, of course, is rollover, and it does significantly blur the opportunities there. So take a look at the 30-minute chart. Here's our weekly kickoff low. We tested down below it. Our profile yesterday has 3 distributions of time and volume. It's looking like we've opened between these two distributions, and that may create the opportunity for us to expect potential repair. If we get down to the point to the weekly kickoff low or this point of control, this could give us an opportunity. There may be some fish under here. Do a little bit of fishing. It's okay to lose a couple of worms, just don't lose your rod, reel, or the boat. Okay? We didn't really have any overnight inventory until now. It was pretty much central inside of range. We're still inside value, so that kind of suggests for staying a little bit patient. Again, prepare is likely, low excess, low yesterday. In other words, there is some excess, but not much. Take a look at the TPO chart here. So this is yesterday's chart. We opened and really tried to accept below weekly kickoff low. Remember that level is 85.25. 85.25. Right about here. And we couldn't hold it. We could not hold it. There was no new selling coming in down there. It doesn't mean it can't come in. As we know, anything can happen. But it created an opportunity for price to continue this move to the upside. It was also aided by the, wasn't aided by the API because that didn't happen till after the close. Buyers just came in, didn't like it down here, and they pushed it higher. Now we're back down to that level, and we're looking for early opportunities down here, even though we are in range and value because of the presence of the weekly kickoff level, which was somewhat impactful to this market yesterday. So if we start showing signs of acceptance below that level, we start to look for opportunities in that direction. If we can't, where we opened, there is, again, the potential of repair between here and here, or repair between here and here. Okay, high volume nodes going through the low volume nodes, just checking and repairing some of the holes in the profile from yesterday. If in case we are waiting for 9:30, the EIA petroleum status report. So we may just kind of do a lot of repair between now and then. We're already at 807. Opening range remains the high of the session so far. That those levels are the low of the opening range 85.44, the high of the opening range 85.66. So 22 tick opening range. Already kind of pushing to the downside, but again, up against an important inflection level. 85.27 is our low. 85.25 is weekly kickoff low. So this is kind of an important level here for us. Take a look at the NASDAQ now. All right. Volume and open interest have been good, but again, waffling. We added 2,700 estimated in open interest. Yesterday. We got an overlapping to higher range, flat out higher value yesterday, accepting higher pricing. It is attempting to. How good of a job is it doing in getting there is, again, in debate, because we do have on the daily chart a large degree of excess at this high yesterday. Remember the excess we had down here in the S&Ps and the NASDAQ? This is pretty substantial excess on the daily chart. Take a look at the 30. Okay, again, early before the number came out, we didn't have any real overnight inventory. We may be getting a little bit short in the overnight here. Here's our our extended trading hour excess. Was the excess that great in the regular trading hours? I know we had some pretty decent excess off the low here, and the NASDAQ really presented much stronger than the S&Ps did yesterday. The S&Ps took out the previous day's low, where the NASDAQ held up much better. Well, the NASDAQ has been beaten down further. It's got further to go back to the upside. Again, ask yourself, we know that the market has been attempting to move higher. How good of a job is it doing getting there? Is volume holding up? Is open interest holding up? Are we seeing continuation momentum? Yes? No? So again, back to the 30. Let's take a look at the TPO chart. Okay, a little bit of excess on both sides of a very even overnight profile. Similar profile to the S&Ps. We did close out the single TPOs, which makes this one distribution, but a very toothy distribution. Yesterday, day before, we had excess at the low, no excess high, low excess high. We got excess on both sides of this market, so again, I'm going to try and stay patient as we are trading outside of value, but in range. Think about what the traders and your direct competitors are thinking. Well, retail sales should be good, should be moving higher, but what does that mean for interest rates? Everything seems to be about interest rates these days. And speaking of interest rates, that's going to affect the U.S. dollar, and the U.S. dollar is going to affect gold. It continues to attempt upside continuation. Yesterday, however, we lost 15,000 in open interest. It was more of a consolidation event than a long liquidation, I believe, because the market actually traded higher on higher volume. As long as this U.S. dollar slide continues, I don't think we have much downside risk. Of course, we don't know if that's going to maintain. Consolidation day yesterday, open interest lower with little movement in the day time frame. Again, another market we have to ask. Market's attempting to move higher. How good of a job is it doing? Is it attracting volume? Is it continuing to attract open interest on up days? Yesterday, maybe not. Maybe a little bit of consolidation may be falling into play here. And again, we've got the weekly kickoff high that we tested close to yesterday, which is 1794. Take a look at the 30-minute chart. Let me double check that. Yeah, the preliminary open interest in gold says we lost almost 15,000 contracts yesterday. Right? So how do we do that? We didn't really move all that much. Look at settlement. Same, relatively. We had a jump, another jump later on. The market didn't really go anywhere. How did we lose 15,000? It was a liquidation event where buyers met sellers that were trying to get out, lightening up. Does that tell us that this market is suffering, that this auction to the upside is tiring? It is what that could possibly mean. Now watch the dollar. If the dollar shows signs of recovery, there might be a pretty good downside opportunity here. And again, as long as we're staying below weekly kickoff low, we accept above weekly kickoff high, we've got space. Check the TPO chart, market profile. Excess. Price got too expensive. Buyers left the building and sellers took over. Long liquidation is what this profile is telling us. Look at the weak lows here. There is excess at the low here, but this mechanical ledge down here is indicative of shorter time frame buyers recognizing that level and trading it and then getting paid less and less every time they trade it. This is an important level. Yesterday's regular trading hour low will be pivotal for potential upside or downside continuation. Excess, no excess. Let's check the euro. Okay, the euro tested again right up to weekly kickoff high. Fell short of it this time. Volume and open interest increased just a little bit. It wasn't very big yesterday. We added about 800 contracts, but pretty decent higher volume on an overlapping to higher day. Got another test of weekly kickoff high here. Watch the dollar, of course. Here's the 30-minute chart. In range, in value, a test to weekly kickoff high in the overnight. This is going to be an important level if we get the opportunity to look for an execution there today. And right in the middle of value, I'm not going to do anything. Do we have any overnight longs in this market? Perhaps we have a little bit of overnight longs, but they already seem to be, to some degree, reconciled. Patience. Keep your eye on the dollar. Here's the 10-year. So our attempted breakout of this bull flag here didn't really bring directional activity yesterday. It did increase volume a little bit, but it lost 41,000 in open interest. That I find interesting. I'm going to double check that as well. Yeah, overall, almost 42,000 loss in open interest yesterday. Now, when you look at how thick the 10-year is, it's not that big a deal. I mean, there's over 4 million contracts in open interest in the 10 years. So it's a very thick market. But still, the loss in open interest after a breakout of this in this regard makes me doubt the potential upside continuation. And that doesn't mean that it can't happen. It does not mean that it can't happen. All it takes is new buyers. We need to see rates continue to slide to the downside, which how long is that going to be going on for? We know they're going to continue higher at some point. Take a look at the 30-minute. So we didn't really have any overnight inventory before the open. The market seems to be continuing to move higher. We may be seeing rates sliding to the downside now, but the expectation, what I'm looking for and trying to find are opportunities to buy this market on weakness due to this breakout. Haven't seen too many opportunities. Well, maybe here's one in the overnight when it tested right down to yesterday's low. It did leave a little bit of a gap here. And so this market is now in rollover. 1 week from today, we'll be looking to see if we want to move to the January contract. Open interest relatively inert yesterday. It did lose 3,200, but not really much going on here as far as continuation. I'm looking at balances here. This market is largely in balance. Weekly kickoff low is the one extreme of that balance. That's 570. I'm looking at the upper extreme of this area here to be right up around 640. Doesn't seem like there's much of a probability of us seeing that perhaps today. Of course, there's anything is possible. It seems as though our earlier opportunities might be down around weekly kickoff low, which, after coming down here has been supportive ever since. Take a look at the 30. So we do have some overnight inventory that is already to the short side. They are continuing to get paid after the open. The next level that I will be looking for opportunities is last week's low, weekly kickoff low, and a naked point of control that remains unchecked just below those levels. So this is really kind of a thick area. If I were fishing, I'd be throwing my lure under this pier right here, looking for some bass or a couple of walleye right in this area. Again, direction is unknown. We don't really know which side the market is going to go if we do get down here. If we accept below it, continuation to the downside is entirely possible. If we can't hold below it, a move in the opposite direction is the next best thing, right? What I don't want to happen is for the market to become magnetic to this area and get everybody chopped up by being long above, short below, long above, short below. If that seems to be happening, step away until you get some sort of better information. Yes, wait for a three-legged wildebeest. Three-legged wildebeest, absolutely. All right, so you guys are having quite the conversation here. That's a good thing. I don't want to take everybody's time by reviewing everything, but I'll check it out after the forecast here, and appreciate everybody's contributions, everybody's thoughts, everybody's ideas. And we will be very busy today again. So lots of good discussions and conversations for us all today. Fred Decker, Ray, I'm probably going to see you about 11 when I'm having drinks with Deanna, and we will see everybody. If not there, we'll see you for the group coaching with Jared Tendler. If we don't see you there, we'll see you for Make Hogue Money, and if not, maybe we'll see you for the recap. It's going to be a busy day. So, we've got just a few minutes to the open here. Let's take our deep breath. Stay humble, grateful, and creative today. Keep praying for peace. It makes a big difference. Be kind to others. Be kind to yourself. Get out there and profit today. Trade well, and I will see you in a little while, very shortly in the proverbial trading pit, if you will. Have a great day, everyone.